Hi everyone, this is David Pryor from Priority Funding and Forward Funding. This is the third video in the session working with accountants and clients on different funding facilities. The first one we spoke about was property funding and debt consolidation. Second, last week was the equipment funding. Today is your typical unsecured loan for your business. This is viewed as a cash flow type lend, and predominantly it's based on the monthly turnover you may have within your business. So typically we want to see a business that's turning over minimum, say $10,000 a month, which is just over $100,000 a year, obviously, through to whatever it may be per month you're turning over. Now, in a typical unsecured transaction, the lenders will lend up to 1 to 1.5 times the monthly turnover. So if you're turning over $20,000 a month, good, strong, consistent, regular income coming in, then you may be able to borrow between $20,000 and $30,000. You can use that for bills. You can use that for purchasing more stock. Please use it for something that's going to create you more money, because you don't want to spend your hard-earned money on something that you're not going to generate further revenue against. Okay. So the next step here is that you should only ever consider one unsecured loan at any one time. I'm talking to people all the time who've got 3 and 4 facilities, and they've put a noose around their neck. They've allowed for this type of relatively easy funding sources to actually create a very high cash debt on a daily or weekly basis against their business. Normal unsecured loans will cost around about 15 to 20%, but there's some that can be 40 to 50%. So it's very, very important that you do not use those high debt ones unless you specifically need it for a very short period of time. Okay, so let's have a look at the criteria. So I mentioned earlier in the last video that we have time in business. So a good application will be 2 years in business, but they will look anything from a matter of a few months in business, but they're the more expensive facilities. Secondly, we then have a good credit history. I mentioned on the previous videos, 600 to 650 is a minimum score. If you have a lower score, then we can work through what other options we have for you. Thirdly, if you're a property owner, you can borrow more than if you're a renter, simply because your profile to the lender shows that you have a capacity. You're not going to move. You're not going to run away from your debt because you have a property that you need to protect. The most important thing they do with this type of lending, up to say $250,000 in most cases, is they're going to look at your bank statements. And typically we use an Ilion bank statement link or bankstatements.com.au. And if what that does, and many people are worried about clicking on a link, but essentially what this does is it downloads your bank statements. It does an analysis of what income you've created over 6 or 12 months, what you're spending your money on, whether it's gambling, whether it's paying debts, whether you're actually making payments on time. So this will show us delinquent payments. This will show us overdrawn accounts. So I've had clients who turn around to me and say, David, I need an unsecured loan. When I look at their bank statements, they've had 79 times in the last 3 or 4 months where they've missed their payments. That means that they are not showing the ability to pay what they've got, which is not a good fit when you're looking at unsecured loans. Unsecured loans can be utilized over a 2 to 3 year period. One's even 5 years nowadays. That's for the better quality ones, okay? They will be over a set period of time, and you've even got 2 different types of lends that might interest the accountant and the client. The first one is what I loosely call your set and forget loan. Okay, this is where you might borrow $150,000. It's paid over 2 years, and it's the same monthly payment. They drop $150,000 in your bank account, and as long as you make the payments, all things equal, everything's going great. Okay, that works if you can use the $150,000 up front, and you don't have any residual money sitting there that's not creating income for you. Okay, generally you can't pay this back quicker, but it allows for that budget, that amount coming in immediately. The second one, which I like to utilize more, is actually loosely an overdraft. It's a cash flow lend, which is an overdraft. Use the same example. You borrow $150,000, but today, after settlement, you draw out 20 to pay wages. Okay. And then next week you get in $10,000 from an invoice you've just been paid for. If that $10,000 goes straight back into the account that you run your overdraft through with this lender, you're now only owing $10,000 plus a little bit of interest, which now means your debt that you're paying back is only $10,000 and not $150 because you haven't used the rest of the money. But what it does mean is you can redraw against that money whenever you choose and whenever you want to. As long as you're redrawing it and paying it back and redrawing it, I've seen people use this for 5 and 10 years and use it as a very positive facility. You'll notice that you can do these through your banks, but they are generally linked directly to your property. This is not linked to property, so this is not linked to any specific security unless you allow for it to be done in the first place. So effectively, any business can borrow for an unsecured loan if their profile meets the requirements of the funder. Check with your accountant, as the accountant will be able to look at your numbers, look at your facility. We may use a mixture of what we've been speaking about over this series of videos on debt consolidation, on equipment, on unsecured loans. We also do business finance, general business finance to purchase another business, and we also do invoice and trade finance. A number of these facilities will be great for your business. As I said, check with your accountant. I look forward to helping you through different funding facilities. There'll be a link to on the page to our numbers and for an appointment to speak to me further. And again, I'd love to talk to you and your accountant about how we can actually help to fund your business right today, in 6 months' time, and well into the future. This is David Pryor signing off on this series. I look forward to speaking to you again very soon.